Okay, so this is our second volume of China dumping US bonds, and we're going to be answering some questions about our peer review or the peer reviews that other people have done about our first video. So the issues and questions raised from the first feedback was people didn't really understand the motivation behind China dumping US bonds, the economic implications of China's actions on the US economy, including effects on the government's ability to finance its fiscal deficit, and measures taken by the US central bank and government to mitigate the impact of of bond dumping. Future prospects for US China relations, including potential for peace and cooperation. So these are the first issues and questions that were raised. And we also had some trouble with people and how they viewed our voiceover and interaction, our visual presentation, structural elements, and the content in general. So this is how we decided to adjust. So instead of having a slow pace, we're going to have a faster pace so that people might get more intrigued by our information. And the lack of interaction of group members, we decided to have multiple speakers, but it was very hard to try to record ourselves and have all of us there. The overuse of text on slides, we tried to reduce that and add more visuals and graphs, and we also tried to add an outline to keep everything more organized. So now we're going to be talking about the second issues, the second form of feedback, and the issues and questions that were raised there. So people had trouble with the data and the visuals, group dynamics and the presentation style, structural and coherence issues, creativity and engagement, historical precedents supporting of challenging the idea of a global shift away from the US dollar. So we didn't really talk much about BRICS. We did a bit, but we didn't really talk much about how the world is shifting away from the US dollar. The explanation of gold as a safe haven asset during the economic uncertainty with examples or case studies. So we did talk about how gold is a safe haven and how it has always been a safe haven for much of history, but we will discuss it a bit more. And same thing with the gold reserves and the central bank increasing gold reserves in the context of de-dollarization and how it affects the global system. Yes, so this is the adjustments we made to that. We were expecting to add credible sources on U.S. bonds in China. We want to enhance the tone of voice with increased interaction, and reduce text and add visuals like tables and graphs, and to add outline to increase organization. So the motivation behind studying China dumping U.S. bonds is that studying China's dumping of US bonds is crucial in understanding the potential impact on global financial markets and the US economic policy. So, because China holds such a significant amount of bonds, this is why it's very important for us to understand why they do so and why they're using that as a form of as a way to peg their own currency with the US bonds. Additionally, it offers insight into China's strategic economic positioning and its implications for the balance of economic power between two of the world's largest economies. Now, the second question is measures taken by the US central bank and government to mitigate the impact of bond dumping. So we do have an answer to that. In response to the China dumping bonds, the U.S. central bank can implement monetary policy tools such as open market operations to purchase government securities in order to stabilize interest rates, while the government may engage in fiscal measures like adjusting public spending or taxation to maintain economic balances. And as we talked about before, the U.S. has sanctioned China. So the U.S., not just central bank, the government. This is more to do with the government. They have sanctioned the Chinese government for the rapid dumping of U.S. Treasury bonds, because not only is it impacting U.S. economy, but it's impacting economies worldwide. So that is a response that the U.S. government have taken. Economic implications of China's action on the U.S. economy, including the effects on the government's ability to finance its fiscal deficit. China dumping US bonds may lead to higher interest rates as bond prices fall, potentially increasing the cost of borrowing for the US government and impacting its ability to finance deficits affordably. This action can also signal a decrease in confidence in US debt, which could have broader repercussions for investment flows and economic stability. So that's the answer to that question. Now we will move on to the historical precedents supporting or challenging the idea of the global shift away from the US dollar. So, as we know, the US dollar is not becoming as popular anymore with the introduction of BRICS and other organizations that want to shift away from the dollar. So, historically, the Bretton Woods Agreement established the US dollar as the world's primary reserve currency, a status that has been challenged periodically by shifts towards currency diversification, like the increased use of the euro in international reserves. However, despite discussions about moving away from the dollar dependency, the US dollar has maintained its dominance due to the depth and liquidity of US financial markets and the lack of a viable global alternative. So, as we discussed, moving away from the US dollar is something that many countries are trying to do because they have relied on the US dollar for a long time and for too long. So, that is true, though, that it's very hard to find another alternative. Like some countries, like China, by dumping US bonds and trying to shift away from the dollar, they're instead of pegging their currency to the US dollar and to the US Treasury bonds, they're doing something else, and they're purchasing gold, record amounts of gold they're purchasing. And that's the next question. Explanation of gold as a safe haven asset during economic uncertainty, and we have examples along with that. So, gold is considered a safe haven asset during economic uncertainty because it maintains its value and is less influenced by government policies, making it a stable investment when other assets are volatile. Gold is always a safe haven because every single country never never stops wanting gold. It's something that every country wants, and we have examples for that during the 2008 financial crisis and the economic instability caused by COVID-19 pandemic. Investors flocked to gold. They purchased gold significantly, and that drove up its price as a safe store of value. So, our final question is indicators of central banks increasing gold reserves in the context of de dollarization and its potential impacts on the global financial system. So, the indicators of central banks increasing gold reserves include heightened gold purchase activities and public announcements of augmenting their gold holdings, often reflecting a strategy to reduce reliance on the US dollar. This trend towards de dollarization could lead to a more multipolar currency system, and after the dynamics of the international trade and finance, potentially diminishing the dollar's role as the world's primary reserve currency. So, as we talked about, right now, and as it has been for a long time, the world has been run by one currency mostly, and that is the US dollar. And the world has been trying to shift away from that to make it more multipolar. So, BRICS, which includes Brazil, Russia, India, China, and South Africa. They have all been trying to shift away from that the reliance on on the U.S. currency because it's simply too much for them to uphold. And as we saw. When tensions happen in China, for example, in China and their war with Taiwan, imagine a country like that with so much money invested and so much of its currency pegging onto US assets, which is their treasury bonds. So if they were to eventually, let's say, go to war with Taiwan, how would that affect their chances of coming out victorious and their chances of protecting their own people from not just obviously military issues, but more economic issues, their households, their everything. So countries are now realizing, the big countries which are part of BRICS, they're realizing that they have relied on the US dollar for too much, and the US is now getting involved in many wars and many conflicts, and their countries might or might not be involved and might not want to back the US in certain ways, and to have that much of your assets, that much of your money invested in the US government would be a negative thing for them, and it would impact them in a way where they might end up being worse off. So, although the US Treasury bond is a very strong, very safe, and reliable source of a reliable asset to peg your currency on, it at the end of the day, it's another government you're investing in, and that government has its own project, its own goals, and some of their goals might not be in agreement with other countries such as Brazil, Russia, India, China, and South Africa. So that's why they created this system, and that's why they're not just those countries, but other countries are trying to shift away from the reliance of the on the U.S. dollar. So that's one of the reasons, and obviously a very big reason why China is deciding to dump a lot of U.S. bonds, and it's doing that at an accelerating rate. So thank you for tuning in to our second response video, and please leave a comment in the comment section below.